Hello there. The tunneling into our apartment has stopped for today. It was going again earlier, but so far it's stopped. Today, I want to chat with you about cash versus accrual. I have had clients who have asked me which one's better. I've had some who definitely want to do the cash method. I've had some who I decided that they wanted to do accrual, but then they were actually doing cash and we just sort of wasn't sure what the difference is. So let's chat about it. What is cash versus accrual and which one's better? So the cash versus accrual is really a question of how you want to record your income and your like bills and receivables. It's a method of accounting, basically. So your cash method of accounting means that you only record transactions in your books when cash has gone out the door or cash has actually come in to your business. So what does that mean? It means that if you were to generate an invoice and send it to somebody, that if they didn't pay it right away, you wouldn't record that sale right away. So you would generate it outside of your system, like you're outside your QuickBooks or whatever. QuickBooks allows you to switch to cash, so you could record this in your QuickBooks system, but you wouldn't have accounts receivable. It just wouldn't get recorded until somebody actually paid you money. And it's the same on the other side. So if you had a bill that came in, you wouldn't actually record that bill until you paid out the money for it. This system, although simpler, can start to get a little bit tricky because there are specific rules that I'm not going to get into the details of, but there are specific rules that we sort of get confused between cash and accrual. The other thing is that cash reporting is not allowed for income tax purposes. So you would have to do an accrual at the end of the year for any sales that you have that are outstanding but you haven't received for, and for any expenses that you have outstanding but you haven't actually paid yet. So that caused a little bit of like a tricky bit at the end of the year. Accrual is when you are posting sales and expenses, basically, when the invoice goes out and when the bill actually comes in. So if you were to receive a bill from a supplier, for example, and the term on it was 30 days, then you would put in the bill when you received it and it would be recorded as an expense at that time. Then you would record the payment 30 days later or whenever you paid it, and the expense wouldn't be recorded at that point because you've already recorded it. It would just be cash going out the door. So it would be cash to accounts payable, basically. And this method, I think, is actually better. It's a little bit more complicated, but it makes more sense from the perspective of when you're looking at your income statement. The income and expenses are going to align a lot better. So if you had insurance, for example, and you prepaid your insurance for the whole year, in the cash method, you would just expense it all in one period. But on the accrual side, you would want to recognize a piece of it every month. So then you have a better understanding of what it takes to actually generate income every month. So instead of being like, oh man, I spent like $1,400 on insurance this month, but I spent nothing in the rest of the year, you would take that insurance cost and like piece it out over the whole year. So then you would say, oh, actually I've got 1/12 every month of insurance. That's not how the cash flows through your company, but that's what it actually takes to run the business. I think that is a much more clear way of doing it. It definitely provides a better description or a better snapshot of the company at any given time. It also means that at the end of the year, when you go to file your taxes, you don't have to post an entry to make the books right. Or I guess you wouldn't necessarily post the entry, but you'd have to create the entry on the cash side. So one is not necessarily better than the other in certain circumstances, but I definitely prefer the accrual method. I think it's better to see the income and expenses line up rather than to track the cash, which can kind of be all over the place sometimes. If you're running an accrual system, then you can run a cash flow statement, which actually shows you the cash in and out of the company. So you can get that information out of your books. It just looks a little different. A lot of times, oh, can you hear it? They're tunneling again. A lot of times, because a small business will have limited bills or they're paying things very quickly, like the cash cycle is very fast, the accrual and the cash methods end up being very close. So there's usually not a huge difference in small business. Do you have any questions about that? Is there anything that you want to know, or are you not sure which method fits for you or which method you want to be using? Let me know in the comments. I'm happy to chat with you about it. I'd love to help you out and let you know which one works better for you. If you'd like more accounting tips, tricks like this one sent to your email every week, then sign up to my newsletter. I've left a link for that in the description, and it's free. That's right. It's free. I promise to never, ever sell your information to somebody else, so you'd only ever get emails from me. And you can unsubscribe at any time, so no risk. Man, they are really tunneling today. All right, well, I guess that's all done. I hope you're doing well. I'll see you tomorrow.